Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, welcome back. So let's update our view on euro currency. So performance in recent few sessions not too fast, as you could see. It's mostly market stands in a tight range, and today actually market makes us and forces us to be careful to details that we have. When I will show you the situation on different markets, you understand what's really the problem here and why the overall situation remains tricky in euro. First of all, tomorrow, as you know, it will be the holiday in Europe. It's a Labor Day. It lasts for 1-2 days, so it will be a long holiday. So market might be really thin tomorrow morning. On Friday, when we will get payrolls and probably will be some motion appears, activity returns. But once again, closer to the end of the European sessions, in the middle of the European session, when the United States will step in. But in the morning, as tomorrow, as on Fridays, probably might be really thin market. Currently, if you take a look at the intraday charts, market stands on the point where makes no sense to consider new entries. So we already have made two takings of the position. So currently, at this point, we already did everything that we could. So on the 4 time frame chart, on the daily, it remains in the same triangle, and market stands close to the low border. So that's why at this point, all bets already are made, so all stakes already stands on the table, and we just need to see what will happen next. Market keeps this shape of the triangle, keeping the potentially bullish sentiment here with this performance. On the 4 time frame chart, that's the trend line that we need to keep an eye on. Downside breakout will break the short-term scenario that we're considering right now, discussing, and probably will increase the downside retracement, which is actually might be justified by big engulfing pattern on the top. And as you can see on the dollar index, we have the same pattern here. So on the first glance, it also has chance to happen with this rising of the dollar based on the kind of hand shoulders right here, this left shoulder head in the way of the big engulfing pattern and possible right arm. But with these patterns in this scenario, we have a few tricks. First of all, this is the appearing of the bearish grabber that stands on the gold, on dollar. It is still valid, and it suggests taking out of these lows. So it suggests erasing of all these things that we just talked about. 2 days ago, you can see solid downside acceleration, significant upward action. Since then, we have just minor bounce. So this type of action, as you understand, contradicts to idea of this possible performance, and correspondingly contradicts the idea of the downside breakout of this pattern on the euro. Second reason, that's on cross-market analysis, the performance of the 10-year bonds. Market here is also, as you can see, stands at the eve of at the edge of the erasing of the similar shape. So the right arm is just start falling and turning to the nosedive. This downside acceleration when the yield starts dropping. So this also doesn't support the dollar. So yields are dropping on the United States, and actually it makes dollar to be weaker. That's another reason why at the first glance the scenario that you see might not work as it looked like. So the same story, by the way, about the hand shoulders. But if on dollar index this hand shoulders looks more or less normal with this type of action, on a euro currency, I'm talked about this already starting last week, and here we have bad looking hand shoulders. So this is actually not the hand shoulders, it's mostly the triangle, and that's the reason why we have to keep an eye on the lower border of this pattern and this particular trend line. Why actually all bets already are made. Because if you take a look at the hourly chart, you could see how the overall performance was standing. So yesterday we said keep an eye on the retracement, either to the 30% level or to the 618, or you will just split your position in parts, or you will start searching minor patterns for position taken. It doesn't matter. This is just a route and how to step in. But the overall idea is that with this, yes, overall price action looks really choppy. It's not impressive. We do not have something of this kind that we would like to get. But maybe this stands in the future. So we'll get payrolls report. Now many analysts have some doubts and actually suggest that the first fruits of the Donald Trump policy might start creeping inside of the new statistics, and payrolls is not an exception. And actually, if you take a look at the history of the payrolls in the recent 6 to 8 months, you can see that they are not really growing. It mostly stands flat. The working hours, weekly working hours, is decreasing. So this is not the good performance of the job market in general. So that's been said, here we already have made chance taking position at the 30%. We've got healthy pullback here. Market dropped more. Once again, 618, position taken. Pullback here from the 618. So in both cases, it was enough time to protect position with the break-even stop, or even if you're trying to split your position in parts, now you have some average position somewhere in this area, so it stands in the positive range. Currently, with this also upward channel, I do not see necessity to consider some new possible scenarios for taking long position, because we have done this. We have did this on a points that we have specified. Currently, we have nothing new here, so we just need to see for the market response. If we're correct on the bullish potential performance and the possible upward action, it has to start somewhere from this area. Some minor chances exist that maybe market will show first a deep drop back to the lows and then starts upward action. Potentially, maybe this could happen, but it doesn't fit to normal, natural price performance of the market here if it intends to show upward continuation, especially if it stands inside the triangle on the daily chart. And that's why this scenario, although maybe theoretically it could happen, we're not considering. We're standing with the major scenarios that might be formed. And from that standpoint of view, we already made all preparation that we could. Now the ball on the side of the market, so it has to make this next step. We hope that the step will be to the upside, and from that standpoint of view, we have the positions and just watching what will happen. That's in 2 words what we have on euro currency. Finally, just would like to show you the daily chart on the Great British pound. It's a bit different, but here is also might be interesting stuff if you're trading cable. Take a look that here is potentially, it might be the background for the double repo sell pattern. So we had good thrusting upward action, close below 3x3, new top, and if market will close below it, it will be potentially double repo sell. And if you trade the Great British pound, you could keep an eye on it. But don't forget that failure of this pattern, it doesn't mean the cancellation of the bearish pattern. It means canceling of the bearish pattern. It means that this will be opposite pattern. So the failure of the direct double repo means bullish double repo failure. In this case, you could reverse your position, or maybe you right from the beginning will be watching for double repo failure based on the picture that we have in other markets. But this is just for some information. If you're interested with that, just you could keep an eye on this performance that we have. It also might be interesting.